Hello, everyone. Welcome to today's special presentation on Secrets of Growth-Driven Finance Departments. My name is Angela Tice. I'm the National Membership Chair for the CFO Leadership Council, and I'm going to be facilitating today's session. So I just want to do a little bit of housekeeping before we actually get started. Your lines are muted, and that's really just so that there are no distractions. However, we certainly encourage your questions and your comments for today's discussion. So please, feel free to type your question in the questions area, and I'll make sure to ask those questions on your behalf. I'll be monitoring that area, and I will make sure that we address your concerns. More than likely, we will wait until the end of the presentation to start with the Q&A, so you'll have some time to think about it and then put some questions in there. Please do. We love answering your questions. If you are a member of the CFO Leadership Council, you will receive 1 CPE for today's webcast. Now, to receive credit, you must be a current member, and you need to answer 4 of the polling questions that are asked today. We will interrupt the discussion to bring those to you and give you a chance to answer. And I will say up front, please do that as quickly as possible, just so that we can get back to the great presentation that I know our speakers have for you today. Now, in order to answer those polling questions effectively, you do need to be logged into today's session. So if you've dialed in and you want to receive CPE, you need to hang up your phone and use the direct link provided to you at registration. So very simply, you need to be on a computer in order to answer those questions effectively. For over a year now, the CFO Leadership Council has really pivoted to help support our community by keeping you as connected as possible. And we're really hoping that you're taking advantage of all the virtual programs across the chapters and nationally, like today's discussion, so that you really stay connected with us and with your co-members. There's a full list of programs that can be found on our website, and CPEs are offered for current CFOLC members. And just to mention the next webcast, on September 22nd, we're talking about why the finance back office should care about advanced technology. That's also at noon, just like today's. And on October 13th, we have stimulus funds for business. Collect up to $33,000 per employee. That sounds interesting. So check out and see how you might be able to do that. Guests, if you're wondering how to become a member of the CFO Leadership Council, certainly connect with me after the webcast. We have different opportunities of engagement, and membership does start the day you join. So if you're not a member and you wanted to get CPE and you ended up joining today, you would actually get CPE for today's webcast. So just a good benefit. Finally, I just want to mention that most of our webcasts and virtual discussions are recorded, so that our members can check in and either listen again or listen to those that you might have missed. And at this time, I will say we do not offer CPE when you're listening to those recordings, but there's just so much great information in there. You never know what you might find and what good information you might get from them. So definitely check into that. Also, in that membership portal, don't forget to look up our partner experts like Supplier. Many of them have virtual offices where you can visit and find excellent information in a vast number of areas. You can reach out to them directly if you have specific questions or needs. So it's really a great resource, and I highly recommend that you go in there and check it out and get in touch with them. If you're not really sure how to do any of that or you want more information, you can always reach out to our National Sponsor Relations Manager, that's Andrea Holnay, or even your local marketing director. They can help you navigate through all of that. So that's it for housekeeping. Glad that's over. And it is really my pleasure to introduce our speakers today. We have Mark Rousseau, who's the president of Rousseau & Associates. And over the past 26 years, Mark has established himself as a thought leader on accounts payable, accounts receivable, payments, and document automation. A popular speaker at industry conferences and on webinars and podcasts, Mark advises prominent end users and solutions and services providers on how to use automation to improve document and payments-driven business processes. Joining him is Derek Chang, Senior Director of Corporate Marketing at Supplier, the leader in global payables automation. He leads the development of content and is the co-host of the Business Finance Friends podcast. He's authored multiple white papers and articles in the areas of finance operations and is an avid technologist for back office processes spanning a career of over 25 years. So gentlemen, thank you again for coming and talking with our CFOLC members. And with that, Mark, I think I'm going to hand it off to you.
Yes, you will. Thank you so much, Angela, and thank you all for joining us today. So the past 16 months have been a whirlwind for finance departments. As finance leaders, we had to get our employees to safety. We had to adapt our processes on the fly, and we had to make sure that we kept our processes moving. We finally settled into an operational rhythm, and now comes the hard part, and that is helping our businesses grow again. And that's going to be the focus of today's webinar. We're going to talk about the changing role of the CFO and how growth is a key driver of CFO priorities. We'll talk about the role that finance departments and finance leaders can play in being a growth enabler for the business. And we'll show you how repetitive manual tasks such as invoice processing are a big inhibitor to that growth. And finally, we're going to provide you with an action plan for transforming your finance department into that growth engine that the business needs you to be. And we'll show you those essential components of a tech stack that can support your growth. Before we do all that, we're going to start with a poll question, which is about to be displayed on your screen. We want to know which of the following is your finance department's top focus for improvement for the rest of 2021? Is your top priority for improvement cash forecasting? Is it spend management? Is it risk management? Or is it improving operational performance? Take a moment to respond to the poll question now displayed on your screen. I'll discuss the results in just a moment. So Derek, when you talk to finance leaders, what do they tell you is top of their mind in terms of improvements for this year?
Certainly everybody is going through a challenging time right now. And so there's a lot of uncertainty. So forecasting is always right up there with that. Spend management, especially for hyper-growth companies, I think there's probably is actually less critical in a kind of a weird way because they have more wiggle room. They want to grow fast. They want to grow aggressively. This is the time to do that. Risk, if you are doing anything globally or have any kind of digital footprint, that is going to be a concern for you. And operational performance really aligns with scaling. You know, how do you optimize? How do you optimize your operations and still achieve kind of best practices around what you're doing in finance? It all depends on where you are coming from, right?
It seems to me, Derek, that the common denominator in all of these priorities is data and getting visibility that helps you forecast your cash or manage your spend or head off those risks or even identify those things that are holding your operations back. How would you say organizations are doing in terms of getting access to the data to help them do all these things?
Certainly, if you need to reconcile, that is a big chunk of your intelligence. If you're able to get that information in, particularly at the C level, you want to be able to see as much as you can, but still have a lot of visibility into kind of the nuance of how everything works, but you don't want to be in the weeds of getting into that. But data is critical. It's always critical. It's always been critical. I don't think there's a finance person alive who doesn't survive on data.
Let's see how our attendees responded to our poll question. We asked you which of the following is your finance department's top area of improvement for the rest of 2021.
Yes, thank you. So I will let you know, Mark and Derek, that 32% said cash forecasting, 20% said spend management, 7% said risk mitigation, and 41% said operational performance. So very interesting, especially with what you were just talking about.
So operational performance was the top priority, Derek. That really speaks to those manual processes that many organizations still have. When Tipalti walks into the AP departments of growing companies, is it uncommon to see lots of manual processes, Derek?
Manual and also disparate. So you might even have individual systems that feel like you're automating, but really you still have these gaps in between these processes that need to be stitched back together. That's a human doing that oftentimes. and those are points of failure for a company. Somebody goes on vacation, somebody has to take their kid to soccer or to the doctor. That all of this adds up. And so if you can reduce a lot more of the human transactional elements of finance, I think that operational performance goes up. In particular, for companies that are growing and scaling, that is super critical.
I was a little surprised that only 7% of our attendees identified risk mitigation as a priority for the rest of this year. I recognize it's not the sexiest topic, but to me, it's the scariest. Derek, are you hearing that more finance leaders are concerned about the way their departments are operating these days from a security and compliance perspective?
I think it's one of those things, if it hasn't bit you yet, you don't believe in it. So we deal with a lot of companies who operate cross-border, and so they have a lot of operations, entities across border, suppliers cross-border. Their risk is higher, and so especially with electronic payments, they need to make sure that those things are secure on their end, that there's proper guardrails. The know your customer type, it really applies to know your suppliers as well.
Yeah, absolutely. These are the types of priorities that we're going to talk about in today's webinar, because today when we look at the role of CFOs and finance leaders, well, they've become stewards of business growth. It used to be that we were in charge of financial scorekeeping. Tell us what happened. What organizations are recognizing is that if they can flip the dynamic, if they can get access to that data proactively, now they're able to tell what will happen. What is the implications of adding this product line? What's the implications of expanding into this market? What happens if our cash flow is disrupted in the fourth quarter? In other words, today the business expects CFOs and finance leaders to be a partner in helping to grow the business. When it comes to growth, well, we all know the types of mechanisms, the levers, if you will, that businesses ordinarily pull when it comes to trying to grow their revenues, profitability, and stand out from the competition. You know, things like increased sales and marketing, adding product lines, adding business units, expanding globally, and even acquiring or merging with other businesses. All of these things are ordinarily the purview of CFOs. There's no change there. But what has changed is that now CFOs are becoming more strategic thinkers. They're getting on the front end of these discussions and what types of activities the business should be doing to help drive growth. And so now we see that the CFO's role is changing. Now they're being asked more so to help find and fund solutions. They're going to drive that growth, to help transform the finance function to scale and meet those growth demands. This is a sea change from where CFOs used to be. They used to be in a reactive role. Today, the board and the president and the CEO, well, they expect them to lead the charge. Just consider that 71% of CFOs today are leading their company's digital transformation initiatives. In many cases, the CFO identifies the need to uncover opportunities to drive growth as their biggest issue. And so today we're seeing this change in finance departments. Today the CFO is pressuring finance to change its role in the organization, to move from a tactical to a strategic function. Today, 47% of finance departments are becoming a business partner to the business. No longer a back office function, those folks in the basement with hand-me-down office furniture. No, sir. Today, finance departments are driving the transformation of their business. And the way that they're doing it by and large is by automating their processes. And the key term here is intelligent automation. It's no longer enough for finance departments to just digitize broken processes. Today, finance departments are being asked to use emerging technologies such as robotic process automation, artificial intelligence, cognitive automation to drive decision making, to make things move faster. And this has big implications for the business. Once you have a growth-driven finance function, now the business can become more agile. It's no longer reacting to trends, it's anticipating them. So now we can use historical data gleaned from the past several quarters to identify when those valleys are likely to be in cash flow. We can proactively identify those suppliers who are going to be more receptive to early payment discounts. We'll identify those customers who are likely to pay us slowly. What's more, we can now have better control over our cash flow. So now that we're able to see those ebbs and flows, able to manage our cash flow more closely. That helps us with our decision making. Over the past 16 months, 62% of all businesses reduced their costs as a result of the economic downturn caused by the pandemic. But what's interesting is that most businesses said they don't have strong visibility over their spending. In fact, most businesses only have tight control over 75% of all their corporate spending. Now, if I told you, would you be okay if only 25% of everything your business spent was wasteful or unnecessary or out of control? You'd think I was nuts. And yet this is the way it is for most businesses. And that's because we don't have good visibility into the data associated with that spending. So what happens when it's time to rein in expenses? We simply can't make strategic decisions. So we make across the board decisions. We're going to reduce all costs by 5%, whether it's strategically prudent or not. Well, this is no longer going to be good enough moving forward. As we look for ways to grow the business and to stand out from the competition and stay ahead of digital-born competitors who don't have the baggage of our legacy systems, we're going to need to make decisions faster and more accurately. And all of this helps us gain control over our data. In many cases, businesses don't have good visibility into their information. And that's as true in an invoice processing as it is in our payments to our suppliers. So what happens? Well, in many cases, key data isn't captured. It's not accurate. It's out of date. It's poorly organized. It's not available when and where we need it. And this leads to inefficiencies, complexity, and to risk. So what organizations need to do is find ways to get in command of their data. And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know, how would you describe your finance department's current level of automation? Would you say your finance department is fully automated, electronic, touch-free processing, hardly any manual processes? Are you largely automated, but you still have a good number of manual processes? Are you partially automated? You've deployed some technology, but man, oh man, we still have lots and lots of manual processes, manual keying, chasing down paper and shuffling paper. Or are you manual paper-based? Take a moment to respond to the poll question now displayed on your screen. And we'll discuss the results in just a moment. So I reckon, Derek, that most of the folks on the line today are going to come out somewhere in the middle, somewhere partially automated. And they might be pretty comfortable with that. But the reality is, moving forward, if you're a high velocity business, Derek, partially automated isn't good enough, is it?
Right. And I mean, no one can really truly be 100% automated. We don't live in the matrix. But you think about the points of handoff, as I mentioned earlier, those are the points of failure. And if you have to rely on a human to do that, or some other bit of code that was created, that becomes over time an issue. I think that we're going to see a consolidation of processes over time. These systems are going to be more integrated in general and more tied to the flow of how these operations work. And forward-thinking companies, they're going to want to, they don't want to have single point tools. They're going to want more holistic, more fully automated solutions that run across that entire process.
Yeah, you bring up a really good point, Derek. When I look at finance departments, what I see is typically a hodgepodge of point solutions and closed loop networks, each with their own file formats and user logins and user authentication and proprietary integrations. And people might think, well, I've automated that process and I've automated this process, and that's
Yeah.
okay. But moving forward, we've got to stop this piecemeal approach to automation, no?
Yeah, it's sort of like I want to lose weight, Mark. uh, so I'm going to cut out, sugar, but I still have to exercise. I still have to eat vegetables. I still have to, do all these things, and it is a much more whole process that you have to go through. And thinking about the entire process of payables, for example, just because that's our forte, uh, you look at all the points of communications that come in and how organic those processes are. A lot of times they involve human beings on the other end of the phone or the other end of the email, and you just have errors all over the place because you can't keep up with that kind of thing. And as you're growing, as you're scaling, as you increase your desire to be in the market, you're basically relying on having to solve for those problems in particular.
Let's see how our attendees responded to our poll question. Angela?
Sure. So 3% said they're fully automated, 20% said largely automated, 68% said partially automated, and 10% said manual paper-based. So really, right in line with what you guys are talking about.
Derek, more than 3/4 of our attendees on the line today are dealing with lots and lots of manual processes in their finance department at a time when the business is hoping that finance can help be a growth engine. Clearly, that doesn't surprise you. The question is what would be the single biggest piece of advice you'd give to these folks to move forward on their automation journey?
Probably to, again, not treat the problem as one thing. It is a whole cavalcade of inputs and outputs. So how do you systematically solve for this? And I think the 60%, actually, this is why I love CFO LC folks. They're honest and they're really in tune with where they are. I think I've been to other events and I've done other webinars, and it's not as they're not bought into the fact that there's actual pain there. But this group, this community, so big plug for CFO LC, they're realists. They understand what's going on, and they're always trying to get better. And those are great folks to work with.
And I think what it speaks to, Derek, is the fact that the folks on the line aren't getting what they need out of the finance department to help the business grow. And this isn't just the case with CFO LC members. The fact is that all across corporate America, businesses are grappling with manual processes that are inhibiting their growth. Today, finance departments spend their day toiling with manual, repetitive tasks that drain their time and suck away their spirit. 84% of the typical finance professional's time is spent on things like keying data, shuffling paper, chasing down information, and responding to inquiries from suppliers and stakeholders about the status of things. That leaves only 16% of the day for higher value activities, the things that help drive growth, things like analyzing data or collaborating with stakeholders or building supplier relationships or even cleaning up your filthy vendor master database. And yet, as CFOs and finance leaders, when we think about how we want our staff spending their days, well, it should be the exact opposite of this. We shouldn't be in the business of manual processing anymore. One of the biggest time sucks that our finance departments deal with is acting as a customer service arm to the business, dealing with calls from suppliers and stakeholders about discrepancies and problems and the status of things. In many cases, organizations spend 25% or more of their day just fielding phone calls and emails from suppliers and stakeholders. This, for 20% of AP leaders, is the single biggest challenge that they have in our new remote work environment. It's harder to track down that information when everybody's working at home. And so now it's taking us longer, and it's costing your business more to respond to all those calls. Now, when we think about all these manual activities, whether it's keying or responding to supplier and stakeholder inquiries, the thing that you got to remember is that it only gets worse as you grow. Today, more and more businesses are operating globally, and more of those global businesses are operating in a way that has multiple business units or subsidiaries. So now when we have these broken down, fragmented processes, it only gets more complicated. Think about all the time and effort that goes into just rolling up data from all of your different business units and subsidiaries. Think about trying to reconcile statements from all the different banks you deal with globally. Think about all the different supplier onboarding regulations you have to manage, all the invoice processing rules that you've got to keep in mind. In short, it's a nightmare. And one of the reasons it's so hard for global businesses to operate efficiently is because they just don't have the visibility into what's going on. In many cases, you're dealing with missing data or incorrect data or data that doesn't get there in a timely manner, or even cases where that data is inaccessible. It's stuck on somebody's laptop in a spreadsheet. And all of this leads to poor decision making. And that's true whether you're a CFO or a finance leader. What's more, things become really complex in this kind of global environment where we're relying on manual, loosely integrated processes. Think about what goes into paying our suppliers. From the very start of onboarding a supplier, we're going to have lots and lots of handoffs and manual processes. Every one of those handoffs increases costs, the chances of errors, it slows down cycle times, it creates problems in reporting, and in many cases, it frustrates your suppliers as well as your stakeholders. These are just some of the tasks that finance departments deal with every single day. And in many cases, they're being dealt with in a manual environment. Well, when we look at these manual tasks, the need for automation has never, ever been greater. Just consider what your business spends processing invoices and paying suppliers. Today, the typical business is spending somewhere between 5 and 10 people hours per week just on AP related tasks. If you use data from the US Department of Commerce to bang that up against the cost of this, what you'll find is that means that businesses are spending anywhere from 15 to 30,000 bucks a year to just process invoices. This is really, really costly, but it becomes even more costly when you start thinking about what it takes to reconcile all this data. Over the past 16 months, many of you started to pay suppliers electronically. And in the rush to escape the office, what a lot of you did was call up your bank and say, I've got to stop cutting checks. I've got to start paying my suppliers electronically. No problem, they said. We've got an ACH product. We've got a card product, and you can still use checks, or you can use our check printing service. Well, that sounds great, you thought. Well, here was the problem. In many cases, those systems from your bank, well, they're not integrated. End of every month, you get back a statement for each different payment modality you use from your bank. Somebody's got to reconcile all that data, and somebody's probably doing it in a manual environment. This takes time. It costs you a lot of labor, and it's also really, really error prone. And importantly, it's not in real time. You've got to wait for the end of the month. You never know where things stand. And so our financial close is taking us longer. Cash forecasting is more inaccurate than it's ever been. But that lack of data and visibility also shows up in other ways. Just think about what you need from a tax compliance perspective. Every time we onboard and register suppliers, we've got to make sure that we can pay them, that they're a payable entity, and that we're collecting the information we need to let Uncle Sam know about them at the end of the year. In many organizations, this process was what I would describe as semi-automated, right? Historically, organizations were relying on paper forms and emails to get this done. Over the past 16 months and the move to remote working, that really exposed and exacerbated the problems with these semi-automated processes. You just think about validating vendors, making sure that they're payable. Today, someone has to manually go and compare their information against watch lists. You've got to find ways to capture all of the information you need on suppliers, whether it's just their contact information or their banking details. And in many cases, your organization is holding the bag on storing all of that sensitive information. You've got to make sure that you verify every supplier and individual against sanctions clearing, and you've got to classify vendors for tax reporting. This is a burden on organizations. And today, many of you have turned to email. Yes, I said email, to manage this entire process. There's a lot of problems with using email for supplier onboarding and registration. Top of the list is that it's not secure. I hate to break it to you all. Today, when we're onboarding suppliers with emails, it's opening the door to risk. It doesn't provide us with chain of custody of our data. It doesn't enforce segregation of duties. It doesn't provide us with visibility into where things stand in the process. It doesn't log all of the actions taken during the onboarding and registration process. There's always the chance that data could be inadvertently deleted before retention schedules. And trying to get reporting out of an email system, well, that's impossible. And so organizations are going to find that email is a workaround that really isn't working so well. And this is going to raise your risks associated with onboarding and registering suppliers. Folks, you have too much at stake to continue relying on email to onboard and register your suppliers. IRS fines, wasted time trying to track things down, incorrect and duplicate payments and duplicate entries into your vendor master database. You're going to upset your suppliers with a long, drawn-out process where potentially you're asking them for the same information multiple times. And if you can't do it all in a timely manner, well, now you're going to have supply chain issues. And as the past 16 months have illustrated, that's no way to run a business. This is a situation that's untenable. And so we've got to figure out what to do about it. Before we do all that, we're at our next poll question, which is about to be displayed in your screen. This time we want to know, which of the following tools or technologies has your finance departments already deployed? Are you using supplier onboarding? Are you using invoice management? Are you using global payments? Are you using tax and regulatory compliance tools? Or are you using none of the above? Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. So talk to me about the risks of paying a supplier that's not payable, Derek. How big an issue is this for businesses these days?
Well, certainly there is some fraud that's out there, potentially, as we get it sometimes. Not, we don't pay it, but we're able to identify issues where people might try and submit an invoice. They're not properly onboarded, but if you have an AP team who doesn't know that, and they get an invoice and it's got a due date and there aren't the proper controls for approval, they might just end up paying that invoice. Or not to be dark about this, but a lot of fraud comes from internals. And so if you don't have proper controls internally, and there are folks maybe trying to coerce funds for themselves through back channels, then that's again something that is at risk. Particularly now, when you don't have access to human beings face to face, and you're relying a lot more on digital transactions, it's a higher risk. But at the same time, with the right controls in place, with proper onboarding, where you know the tax IDs, where you verified addresses, where you've even checked the bank itself to make sure that two different suppliers aren't using the same bank account for malicious purposes, then you can get there. So as long as you're testing for these conditions.
Earlier, we established that many of the attendees on the line are looking for ways to improve operational efficiency. It seems to me, Derek, that a self-service supplier portal is one way that organizations can do that. Tell me about that.
Yeah, I mean, self-service, we're a big proponent of that because it puts the onus on the supplier who wants to be paid to actually do the work. And then they're the ones who are actively keying in their bank account information, their tax information, their invoicing. And instead of relying on someone on your team who doesn't even know who the vendor is because marketing made a spend and they didn't know about it. So those controls, putting it in the hands of the supplier to onboard themselves, it's a big relief, particularly when you have tens of thousands of suppliers. It just smooths things out. It keeps it smooth, and also for let's say you are still paying by check, knowing the supplier having access to be able to make that change if they have a change of address, for example, or change of business name and all those things. They're able to do that on their own, and you don't have to deal with checks bouncing back to you and whatnot.
Yeah. See how our attendees responded to the poll question. We asked you, which of the following tools or technologies has your finance department already deployed? So Angela, what are they doing?
Yep, 3% say supplier onboarding.
Derek, you have some work to do on that one.
Right? 42% said invoice management. I don't think we're surprised. 11% global payments, 5% tax and regulatory compliance, and 39% said none of the above.
And the beauty here, Derek, is that organizations today can use a single platform to be able to use all of these tools. Talk to me about that.
Yeah, I think I'm going to keep banging this drum about point solutions. Invoicing technology has been there. It's a commodity. It's wonderful for that pain, but it is one pain in a bucket of pains. And so when you have that, you really need to consider where other points of pain are in that process. When we went to try and solve some of this, the pain was around wire. So setting up wire transfers, particularly globally. The CFO had a little bank fob that he'd carry around with him and have to basically approve every single transaction and key them into the bank portal. Things like that becomes a nightmare. But because they didn't have somebody like a controller who also wouldn't want to do this. I can't imagine anybody would want to do this professionally, but where you're literally sitting at the bank, sitting on a Friday night, logging into the bank to make wire transfers. That has to be the most disparaged, disappointing career choice.
Yeah. Yeah. Well, Well, you heard it here first, folks. If you think your finance department's operations are a bucket of pains, it's time to deploy an all-in-one solution. And that's exactly our message today. How is it that you can position your finance department for success? And it really does go back to exactly what it is Derek was speaking to. The goal should be not a piecemeal approach to automation, not a semi-automated approach to automation. You should be striving for touchless processing with a solution that allows you to be able to automate your invoice to pay process end to end. And technologies today let you do just that. With the right tech stack, Now you're going to be able to affect change across all of those manual activities. It starts with supplier onboarding and management. You're going to provide your suppliers with self-service tools, so it puts the onus on them to provide their contact information, banking details, and to be able to upload any necessary tax documents you need. This is a win-win for your organization. Not only do you gain the front-end benefit of not having to do those tasks yourselves, you're also going to collect more accurate and complete information on your supplier, so that when it comes time to report for compliance purposes, you have the peace of mind that that information is all there. What's more, with a all-in-one solution, now you're going to be able to streamline your tax and regulatory compliance. You'll make sure that you're paying folks who are payable. You'll make sure you've collected all the information you need from them for your tax reporting. You're also going to be able to achieve automation in invoice management and reconciliation. Now you'll be able to digitize your invoice processes. Use technology such as optical character recognition, or OCR, to automatically extract that invoice data and validate it against information residing in your ERP. So now you can match invoices directly against POs or proof of delivery documents, and no one has to do that. The upshot is you're going to eliminate all those manual tasks that drive up your costs, create opportunities for errors, slow down your processes, inhibit visibility. What's more, you're going to be able to reconcile all this information in real time. So here again, we're going to improve efficiency, eliminate complexity, and take out risk. And finally, these platforms allow you to automate payments no matter where your suppliers reside. We've got to stop using expensive wires and bank products for paying our global suppliers. There's an easier way, solutions that allow you to make global payments easily, cost effectively, reconcile the data in real time, and provide you with those roll-ups and reporting that you need if you're a fast-growing multi-entity company. All of this is going to eliminate friction across your invoice to pay cycle. And when you do that, now your staff is only going to have to intervene when absolutely necessary. This is a sea change for our finance departments. Today, it's the exact opposite. We're involved at every step of the way. And once we've done this, once we've eliminated the friction, think about what happens. Now our finance team is free to spend more time on the things that matter most, the things that are going to grow your business and help you achieve success. What's more, you're going to be able to accelerate your cycle times. So that information is going to get to your ERP faster, more accurately, more completely. And that is going to provide you with better visibility, 360-degree visibility into what's going on in your finance department. Today, CFOs are already achieving these types of benefits. They're able to eliminate manual processing time. They're able to improve the experience for their suppliers and for their stakeholders. They're going to improve their ability to comply with regulations and auditor guidelines and industry best practices, because now we're not relying on somebody sitting at a desk making decisions on the fly. Now we've created a digital environment where we have departmental decision making, and we're in a continuous process improvement loop. And this is what's going to drive improvements over time. What's more, once we've digitized our processes, now we're able to establish tools that benefit our department as well as our suppliers. Things like an early payment program. What we find is that 80% of all suppliers are willing to exchange a discount on the invoice due amount for earlier payment of their invoice. This is particularly true when it comes to small and mid-sized suppliers who might not have large credit lines or bank funds to call upon when cash gets tight. So what you'll find is that these suppliers are looking for ways to receive payments early. But it's not always in your best interest to use cash on your balance sheet to pay them. So with early payment programs, you're able to facilitate early payment to your suppliers and you pay a third party with that invoice due amount. Your suppliers are going to be charged a small discount on the invoice due amount, and you might even share in the revenue. This, my friends, is a win-win for you and your suppliers. Your suppliers are going to be able to access working capital that might not otherwise been available to them. They're going to be able to do it in a frictionless way where they don't have to fill out lots of forms. They're going to be able to choose when they accept an early payment discount, and this is going to allow them to assure the stability of their business. For you, well, this creates stronger relationships with your suppliers. You're going to be able to manage those supplier relationships without impacting your cash flow. And you can do this all without a lot of headaches or administrative burden. Automation also is going to help you achieve that real-time visibility that's so elusive for organizations. We find that many organizations say that there's already greater use of AP and financial data over the past several years, and there's no let up in sight. Today, organizations are using our AP data for things like forecasting and budgeting and planning, cash flow analysis, fraud and compliance management, and even spend management. The data that AP sits on is a treasure trove for growth-minded CFOs. It really tells you what's going on with the financial health of the business. The key is you've got to unlock it. And so if you're one of the 78% of attendees today who are operating in that manual or semi-automated environment, well, chances are you don't have visibility into all of the data that you need. And that's where you need to go. What's more, once you've unlocked that data, once you've digitized it, now reconciliation becomes a snap. And that's as true if you're a single entity or a multi-entity organization, whether you just do business domestically or internationally. All of those payments can be reconciled in real time. And this is going to help streamline your financial close. This is going to help you forecast your cash more accurately and more quickly. What's more, now you're going to have better tracking and control over your operations. For those of you who are looking for ways to improve operational efficiency this year, this is key. You're going to be able to have visibility in exactly what's going on with your invoice processes, to be able to identify potential bottlenecks before they become a problem, to make adjustments on the fly, and to continually benchmark your operations so that you're able to keep improving. What's more, you can do it all not only from a laptop, but also from a mobile device. And with integration into any ERP, now you're going to be able to have 360-degree visibility into what's going on. Automation also provides you with streamlined tax compliance. You're going to be able to collect all of the information you need to meet those auditor guidelines and IRS requirements. So the question you might be asking yourself is, how do we do all this? How do I get started, Mark, in becoming a fully automated finance department? Well, the first thing you need to know is that you've got to get started. 70% of CFOs and finance leaders feel that their executive team's demands could be really challenging unless they automate. Automation is the table stakes today. What's more, if you don't automate, it could jeopardize your business. So what you want to do, you want to find solutions that are growth driven. Consider the typical AP tech stack. You want to find a tech stack with 5 key attributes: the ability to digitize all of your processes, to enable collaboration between your staff and stakeholders and suppliers, whether they work in the office, at home, or on the go. You want to make sure you have tools that put your suppliers in control, that provide them with self-service capabilities. You also want to ensure that whatever solution you choose has accountability and security built in, governance controls and audit trails. Don't settle for a hand wave here. And what's more, you want real-time visibility. You want graphical dashboards that show you where things stand, the ability to drill down into data, to be able to get to the root cause of things. You want to have the ability to export data into downstream systems, to connect with your ERP, to provide access via mobile device, or even to do ad hoc reporting. Accessibility is going to be key moving forward. And this means your finance department solution has to be modern. It has to have 24/7 availability. It has to be cloud-based, and it has to have real-time interactions. As you're looking for these solutions, well, there's a few things I want you to keep in mind. Where is your business in its maturity growth? What are your key strategic priorities? What is the complexity of your organization's business model? What are your goals? Are you looking globally? Subsidiary structure, or is that in the cards? And what are the most time-consuming functions? I want you to consider these before you ever talk to a vendor about their technology, because you want to make sure that whatever solution you choose matches up against these keys. So what the message we want to leave you with today is that now is the time to rethink the way your finance departments operate. CFOs with the right technology can be a key driver of the growth of their business, but they've got to find ways to automate their manual intensive processes. That brings us to our next poll question, which is about to be displayed on your screen. This time we want to know, would you be interested in learning more about how automation fuels growth? Take a moment to respond to that poll question, now displayed on your screen, and we'll discuss the results in just a moment. And while they do that, Derek, why don't you talk to us about how it is organizations can use Tipalti to help future-proof their financial operations?
That I may be happy to. For those of you who don't know who Tipalti is, I'm excited to introduce us to you. If you have heard of Tipalti, I'll try and keep it interesting. I really do love telling our story, mostly because we have some very cool customers, and we already provide payables automation to over 1,500 companies. You will probably see once we get this survey completed. Next slide, please. Sorry. There we go. You probably recognize a lot of these logos. For example, if you have kids, you probably heard of Roblox. We actually pay every game developer on that platform. If you're just about to get married or you're looking to get married, you might have heard of Zola, which is a maritally focused e-commerce site. And our system processes, I think, 10,000 invoices for them each month. And they do it with 2 people, if I'm correct. If you've heard of WordPress, you might not know that the company behind WordPress is a company called Automatic. So 70% of the world's websites run on WordPress. We help them with their global AP needs. Tipalti is, however, most proud of our 98% retention rate, which I think for a SaaS company is practically unheard of. So why do I bring this up? It's really about reliability and trust. These companies are not mom and pops, but they're also not major enterprises with unending amounts of resources. They're fast-growing companies looking to scale. I think in the last 12 months, about a dozen of our customers went public or filed their S1s, or certainly quite a few of them have been raising money as well. And we're really proud that we've become the choice for these companies to execute their payables processes. So why do these companies choose Tipalti? Mark, if you could move to the next slide. I won't go into all the depth because it will be out of time in about very quickly, but I don't want to go into all the depths of our technology. If you're really interested, do let us know in the comments or at the end of the webinar. You can connect with us and we'll get you to the right people. So I'll give the CFO friendly elevator ready version of what why our solution is so unique. And that's that we look at the entire payables process as one flow. It involves suppliers, approvers, compliance, banking rails. So it's not just about invoices. It's not about just about payments. It's really about how do you minimize the operational impact to your finance team and get a very maligned process done while also bringing kind of world-class, fully reconciled payables and procurement into your organization. And we do this at scale. It's built on a very robust architecture that's designed to handle a lot of transactions at every step. So we do it for companies that have global entities and global suppliers. It's paperless, frictionless, checkless, stress-free. And there are customers of ours, quite sizable ones, that consider payables now to be kind of a part-time function, even while paying thousands of these suppliers. So I'm going to offer a mental poll question. So this is poll question number 5. As a CFO, do you have better things to worry about than AP? Does your team have more challenging work they need to be doing? And do you want to stop paying people to pay people? Next slide, Mark. Okay, so last thing I'll plug, we have a conference coming up October 13th and 14th. It's virtual. It's our first user conference, Tipalti Illuminate. Mark will be there, so you know it'll be fun. And we'll also have Venus Williams, a gentleman by the name of Robert Mazier. If you've ever watched Bryan Cranston as the Infiltrator, he was an undercover federal agent. He busted Pablo Escobar in his cartel. So very cool stuff. It's 2 days of a ton of thought leadership content, just like this webinar, as well as other ones. Yeah, we'll be showing our roadmap. It'll be fun. I think we have yoga involved, and Second City is going to do an improv session. So it's a good time. We're having a blast putting it together, and so we hope that you can join in on that. So if you go to tipalti.com/illuminate, you'll be able to sign up there. So other than that, I want to thank you, Mark, and thank you to CFO LC for having me.
Well, thank you so much, Derek, and thank you all for joining us today. So Angela, with that, let's see if we have any questions from our audience.
Sure, and thank you. That was great, and that Illuminate sounds really fantastic. One question, and Derek, this is to you. We do business with lots of global suppliers. Any tips for reducing the time and cost involved in this?
Yeah, so that's a great question. Global suppliers, particularly if they're not native English speakers, can sometimes be challenged, in particular with how their invoices are structured. We actually do quite a bit of multi-currency, so we're able to handle multi-currency invoices, and we actually pay in different currencies as well, natively in our platform. That's a big chunk. And then just as Mark was saying about the supplier management, supplier onboarding process, making it more self-serve, because these suppliers might have a different time zone than you. They might actually be looking at a screen than looking at an email with a bunch of questions. By putting it more in their hands, it gives them the opportunity to, get it done on their terms and choose, for example, payment methods that might work better for them. Perhaps they'd rather not have a wire, or they'd rather not have a check, but maybe their bank offers a local bank transfer, like a SEPA payment that we could do. So it gives them a lot more opportunity to track their progress in terms of the payment, and really we try and guide them towards a decision and get them through.
Great, thanks, Derek. And then I know we have a couple more minutes, so I'll just ask this. I think I know the answer, but of course I'm going to ask it anyway. Can all of this be deployed while our finance staff works remotely?
We've been remote for, 19 months ourselves. So, and yet we've still added, I think we're growing 80%. So most of our customers are remote now. It hasn't stopped us. In fact, it's only accelerated this. I'll give a quick anecdote. We had one customer who came to us who, she was the controller. She had a stack of checks. So she would drive paper checks down to the CFO. CFO would have to sign it at his house, and then she'd go and pick them up the next day, get them in the mail. It was crazy.
Madness.
Yeah, I mean, I don't know if she made DoorDash deliveries along the way to help, but it was crazy. And so solving for that, I think, is a huge chunk of why folks are moving to these kind of platforms like Tipalti. the business doesn't slow down, and commerce doesn't slow down. Payables is so critical in that as a piece of how you get your work done and how you get the business rolling. So yeah, no, we've been onboarding quite a few customers right now.
Yeah, I would imagine. And I know we're at the top of the hour, so I'll just say thank you to both. And I can't imagine, you know, with everything feeling like it's just going faster and faster, it's these types of things that you definitely don't want to slow yourself and your business down. So we appreciate your presentation. Mark, Derek, as always, all of your expertise. We appreciate all of that. And members and guests today, again, I highly recommend if you have any other questions for these two experts, you are welcome to reach out to them. And I highly recommend that you do. This does conclude this presentation on secrets of growth-driven finance departments. And I just want to say to all of you, stay safe and stay connected, and hopefully we'll see you on the next one. Have a great rest of your day, all.
Bye, everyone.